Hello guys, my name is Mica Blackman and welcome back to my channel where we talk about loving Jesus, building wealth, and living life. And today's video is going to be part one of my three-part series on debt and debt management. So this is a really important part of financial literacy and I want to take the time to explain it in plain language. So the word debt can be a really scary word and have a lot of negative connotations, but a lot of people don't understand that there is actually good debt. So there's bad debt and there's good debt. And in this video, I'm going to talk about that. And going forward in the series, we're also going to be talking about my own personal experience with debt, how I managed to pay off $10,000 in consumer debt. And then also I want to explain what a credit score is, why it's important, and how to make sure you have a good credit score. So without further ado, let's get into today's video. So in the simplest definition, what is debt? So debt is essentially something that is owed or due, and that is typically money. So debt is basically a deferred payment or a series of payments, which makes it different than just paying outright at one time for something. So when most people think of debt, they think of credit cards, and that is one form of debt, but there's so many other forms. So for example, some common types of debt would be a general bank loan, a line of credit, mortgages, government loans, for example, student loans are government loans, and car loans. So debts can have positive and negative consequences, and that's why we divide them between good debts and bad debts. So a quick way to differentiate between the two is this. If the debt increases your net worth and has a future value, then that is a good debt. If it does not do that and you don't have the cash to pay for it, it's ultimately a bad debt. So some examples of good debts would be mortgages. So mortgages are essentially loans that allow you to own a home without paying for it in full upfront. And essentially your home generally goes up in value every year. So basically having a mortgage is a good investment. Student loans are a good investment. Now, some people may disagree with this. If the education or the degree or diploma that you're pursuing is worth it, then it is a good investment to have a student loan because you are gaining, if you can't afford to pay for that higher education, you are gaining education, and education never leaves you. So you carry that with you forever, and it can be useful in many ways, and it can also lead you to a very high earning job, and that is a good investment. Loans that help you consolidate debt are also a good investment because we want to minimize our debt as much as possible. So if you're getting a loan like a line of credit that's going to help you consolidate debt, then that would be a good investment for you. And another example is small business loans. So small business loans could be the best loan that you ever take out. Borrowing money to start your own business, if the business is successful and you have a lot of drive and vision and ambition, that could be the best money that you ever borrowed, because we all know that you're not going to get rich from working for someone else. So starting your own business, having your own company is one of the top ways to become wealthy. So I think getting a small business loan is definitely a good debt. Now, examples of bad debt. So like we said, bad debt is anything that decreases in value the minute you buy it. And this is basically like all of the common things that we buy. So clothes, vehicles, electronics, etc. All of those things do not go up in value. They decrease in value immediately after you buy it. An example of bad debt is credit cards. Credit cards have extremely high interest rates. That's the worst thing about credit cards. Now, I'm not saying it's bad to have a credit card, but accumulating a lot of credit card debt, carrying balances for long periods of time, is definitely bad because the interest rates are going to kill you. Payday loans are horrible. I would never advise payday loans to anybody. They are worse than credit cards. So payday loans are basically like a very short-term loan. It's essentially, a payday loan is giving you like usually a 2-week turnaround time until your next paycheck comes to pay it back. So people will take out a payday loan maybe in a time of crisis where they have no other option. The charges and the fees and the interest on payday loans is incredibly high. So I would never advise anyone to take out a payday loan. And another example of a bad debt is a car loan, financing a car. And I can speak to this. I have financed my car. I'm still financing my current car. Actually, it was a long financing of 7 years and I'm almost done paying it off. At the time, it was the best option for me at the time. And I have another video on how I got my car, but essentially the interest rates aren't too high, so it's not horrible in that respect, but cars do decrease in value as soon as you drive them off the lot. So ultimately the advice I would give is it's best not to finance like a luxury vehicle that you're going to end up paying so much more for in the long run because of interest. If you can settle for an average car like a Honda or a Toyota or something, if you don't need the luxury vehicle, maybe wait till you can afford to actually just buy that luxury vehicle outright when you're doing very, very well. And when you're on the way to that point, just get an average car. If you need to finance it, the interest isn't horrible, but just letting you know that car loans are bad debt because cars decrease in value. Now, for my own personal perspective, or experience, I should say, with debt, is that I got my first credit card at the age of 18, I think, and this was offered to me at university. So the university that I went to, in the student center, they would have credit card companies come and set up their table and basically offer students a student credit card. And it's not, like I said, it's not bad to have a credit card because you do want to build up a good credit score for future needs, and I will explain that later on in the series. But so I decided to get my first ever credit card, and I can't remember the balance that I had on at the time, but I know that it wasn't too high of a balance, and I did use it responsibly. And since I did use it responsibly, I would just buy things like clothes. Sometimes I would go for like a big clothing shop, and then I would pay for like half of it with that paycheck, and then when I got my next paycheck that month, I would pay off the rest, kind of thing. I always paid more than my minimum payment, so my credit score was good. So when you are using them responsibly, banks are going to offer you more credit because they see that you are a responsible consumer. I ended up being offered another credit card from my bank, and I accepted it, and then later on in the years, I was offered another credit card. So I ended up with 3 credit cards. And as I used them and continued to pay off the minimum payments every month, they would increase my credit limit on the cards. I ended up accumulating a lot of available credit. Now, even though I was using the cards responsibly and I was paying my minimum payment and my credit score was staying great, the issue with credit cards is that when you do run into emergencies, when you do run into tough times, remember I was a student, I was working part-time jobs, and at this time I also was taking on student loans. So once I graduated university, I didn't go directly into a high-paying job. So I was doing internships, I was doing contract jobs that would end, and then I would be in between jobs. So I was working part-time, and then I was getting another full-time job. So there were some times throughout the years where I did end up putting large things onto my credit cards, and then I wasn't able to pay them back as quickly as I had been before because I may have been in between jobs at the time. Also, I did travel a couple of times right after university, and I put a couple of trips completely on my credit cards. I would not advise that at all, but my idea was like, I'll put the whole thing on my credit card, I'll pay off as much as I can right now, and then when I get back from my trip, I'll pay the rest. Well, little did I know that, or did I realize that it's just not that easy to pay off large sums of money on a credit card, because the larger your balance is, the more interest you're going to pay on that amount, and that interest adds up. And so you have to be paying like triple your minimum payment plus the interest amount to even make a dent. But every month that interest adds on there again. So you're like, it's kind of like you're spinning your wheels unless you have enough income to be making large payments to pay off that large balance. So long story short, that interest really catches up to you. I ended up accumulating around approximately $10,000 in consumer debt. And this is during school and also after I graduated. Mostly I think after I graduated, because I was going from job to job, but then I was also accumulating more expenses as I grew older. And in between there, I also bought my car. So a lot of things happened while I was still carrying this debt. Then I had my student loans were in repayment at the same time. So I ended up with $10,000 I did also move a couple of times, so there was times where, you know, expenses, lots and lots and lots of expenses. And then when you have that available credit, sometimes you're just like, you know what, I'm not going to get paid until this time, but I need to do this, and you'll put it on a credit card. And that is the issue with credit cards. So what I realized at the end of the day is that I needed more income. I desperately needed more income. I desperately needed to make larger payments onto these credit cards in order to make some kind of progress. And I desperately needed a smaller interest rate. So if you are interested in finding out how I managed to pay off $10,000 in credit card debt, definitely keep your eyes open for part 2 of my debt series. I hope you guys enjoyed this video. If you did, definitely leave a comment below. Leave any questions that you might have about this topic. I would love to answer them. Click that thumbs up button and definitely subscribe if you're not yet subscribed to my channel. And I will see you guys in the next one. Bye guys.